$365 and welcome to another video. Today we're going to be breaking down USDJPY, understanding where this asset is, where it is going, where we can potentially make money unfiltered, unencumbered or hindered by news, data, sentiment, just looking at institutional order flows, trying to really track the money as we really get into this, long-term analysis. My name is Leroy James Myceri. I am the head trader of 365 Trading Academy, slowly coming out of the woodworks. Happy New Year. I know it's April, but I want to say it again, Happy New Year, because I've not made, much trading content this whole year around. Took a 90 something day break. There was a lot of significance to that. There's a little bit of spending money, right? Gotta spend some money, that we made last year, but really spending time with family and just kind of like rehabilitating oneself, right? Putting myself together. Yeah, I really do overwork sometimes, and it was necessary. There are a lot of things that happened, but if you're a registered student, please do check your email. A longer, detailed explanation was given to you because you're deserving of detailed work, detailed analysis, detailed explanations. I appreciate all the love I received, all the check-ins, checkups. Remember, please note, I could not respond to one person because that would break my 90-day of silence of all things work, number one. Number two, responding to a single person would, in principle, mean I must respond to everyone, right? So I didn't want to, play favorites. Some of you sent beautiful messages that really were so tempting to respond on my birthday, on 365 Trading Academy's birthday. I appreciate you, Eunice, Alvin, Ronald, Dr. Francis, everyone who looked out and reached out. There's so many. If I don't mention your names, it's just, I'm just saying thank you, a massive thank you. And I will be going back to those messages now, by the way, to respond. Right, so guys, let's get cracking. We've looked at EURUSD first and start there. Start with the most liquid asset. If you haven't watched that video, please go back and watch it. It's very important. Now, and then we looked at pound USD. So now we're going to look at USDJPY. And this is really the first, dollar dominating pair I'm looking at. I do suspect that my analysis last year towards the end of the year was astute. All my stuff is recorded. You will see me tell you that, the dollar is going to fall all the way down into the 90s, 98, 97s. And that's what happened, really, or is happening, so to speak. And I can tell just by looking at how price is moving right now, where price is, like you can tell that the dollar is taking a massive beating, right? So we're on USDJPY. I'm doing the short version of my war rooms, one asset at a time per video for the whole of April, hoping to cover 109 assets, hoping to finally release 3 videos a day, short videos, so that when the war rooms start in the month of May, I am well equipped and I finally understand. I don't want to put any of my money on the line right now, or advise you to put any of your money on the line, fundamentally because I'm not your financial advisor, but also because I'm a bit out of touch with the market. So until I have a clean sense and my finger on the pulse like I did last year, I'm going to be doing it this way, right? So I hope this is educational for you. Remember, those of you just watching on YouTube, please do subscribe. But 365 students, after 10 of these assets have been uploaded on YouTube, I'm going to go back and start to do a proper breakdown, long wave back test, and that will be going up on our learning site for students only, right? That is incredible information there to understand why supply and demand from the beginning of time offers an 80 to 90% win rate and how to achieve that, right? I'll be teaching you guys new things during those back test videos, so don't ignore them. There'll be sequence alignments, some module 3 tricks that I'll be introducing and filtering in. So please look out for that, but only after I've done 10 of these short videos, right? So when I keep these analysis videos short, ideally, I thought in my head, it's just one pair, you know, I'll take like 5 minutes, but I've not yet managed to get to 10 minutes. So let's see how well we do, right? So I've got USDJPY and I am looking at the 12 months chart. One candlestick represents 12 months. This chart takes us back all the way to the 1970s, the golden age of capitalism. It's such an incredible time. If I lecture for universities, you know, all my courses generally involve that time period, because you must understand the world and how capital thought are not only around trading, but just mainstream economics, which shaped what we call globalization, which introduced neoliberal policies, which influenced the banking systems we have today, right? So you can see that the dollar, historically speaking, on USDJPY, because both are a safe haven. Be very careful about this pair. Both these guys are a safe haven, but you can see the dollar naturally has always struggled against JPY, and that's because JPY has always wanted a very weak yuan, keeping the Japanese economy very attractive by technically speaking weakening its own currency, and there's benefits to that if you do it properly, right? So we've got a situation here where, you know, year after year, since 1971, we've got an undeniable downtrend, right? You know, thanks to Powell, really, right? You can tell from this era, if we really think back to banks thinking 3 quarters take profit in 1 year, in a 10-year span. When I start to mark the year of crisis for the dollar, which is 2008, 2009, you can start to see a rebound, right? As money is pumped into the dollar. And this recently here, this last 2 or 3 big green candles were because of COVID and quantitative easing in 2020, and then, you know, pumping up the interest rate, right? So you can see finally the dollar was starting to edge up, creating a bottom, right? So some type of bottom. Now module 1 stuff, right? So I want to draw out these bottoms. I want to understand where price is going. At 365, we are higher time frame traders. We understand that we're not looking at a kid's game. We understand billions and trillions of US dollars on the line, and so we want to understand how the people who control those is a plan and a purpose in this thing. So when we understand positional trades which shape your trends, we can start to get a better sense of what's going on, right? So the last big institutional demand that was created on USDJPY will be not a shock to anyone. It was when COVID happened in 2020. We get this very bullish engulfing pattern in 2021 with talks of interest rates and quantitative easing being put to a halt and shutting down the Powell's printing machine, which I'm pretty sure is off. Guys, please note, I am not lying when I say I was off the grid. I don't know anything about sentiment, but when I look at price, and I'm doing this analysis with you, strong Euro USD, strong pound USD, I can't help but imagine. I'm going to remove the block on my Twitter and Instagram soon. And I was on Facebook, but if you follow me on Facebook, you know all I post is my family, and I just clown a lot about politics. I don't even follow trading people on Facebook, so my timeline is very free. Like, you know, I didn't want to see any trading things. And by the way, it's not lifestyle content, so please don't follow me thinking you're going to see a trader's lifestyle. I'm very careful about that. Lifestyle is something that I cannot give to you. Trader's lifestyle comes with good trades. Good trades come with discipline. Discipline comes with understanding and applying the wisdom. That's all we do at 365, right? So it's been wild. But I feel like, you know, Powell's turned on or is about to turn on the printing machine, and I'll catch up with the sentiment. Don't worry. But we can see here on the 12 months chart that there is definitely, you know, a bullish need, right? Price is ready to go bullseye. Price is slowly but surely been climbing for the last 3 years. And the interesting question to ask is, where is price going? We've got a break of, or even better, right? Some would even consider this a change of character, right? All of a sudden, markets are breaking price to the upside. All of a sudden, markets are removing significant supplies. Now, in my trading. And remember, guys, this is the 12-month chart. This will take time. Some of you can even have babies. You can go make love, fall pregnant, give birth while this is still happening. But to happen, it will. To happen, it will, because we've got a significant order block that has taken out a significant order block to give us direction. Price might eventually run out of steam. Price might eventually run out of steam, but it's in the clear now. If you guys see what I've just done right now in front of you, I know I doodle a lot when I talk. It's actually to help me slow down, but we'll catch up personal things later, right? So this is supposed to be a trend line. I'm just lazy, right? And we're on this other side of a trend. We're on the other side of a very from a cluster from as early as 1990s, right, all the way to 19th century to the 20th century, and to me, if price is allowed to run over time, there's really no telling where it's going to go. Specifically, not talking about the dollar as an asset. I'm talking about the dollar versus the Japanese yen. Don't translate this information into the dollar and every single other pair. I'm talking about the dollar versus a currency that by design is kept weak, right? And I'm saying there's room here. There's room for some strong positional plays. So look out for that. Right, so the month of April might try and fill up this week. Not the month of April, 2020, the year 2023 might do best to fill this whole week up, right? Fill up this whole week, right? So some slow push upward, and then we'll see where price goes, right? But now my job in the next 5 minutes to end this video is to then slowly but surely break down where price is in relation to where it's been and where it is going. Where it's been and where it is going. Okay. This is USDJPY. On the presidential chart, because the 3 months chart, one candlestick represents a financial quarter. Remember, with price, banks think in 3 months, take profit in a 1 year span, in a 10-year period. On the 3-month time frame, we can see some slowing down, right? So it's time. You see, the thing is, but at some point, I gotta delete this stuff, right? Let's talk about lines now. Let's actually track what on earth is going on demand areas. So I've got a nice long, very faithful, price blocker here that has pretty much held price down from, say, 1986. Price came back to it in 1990. Price didn't arrive sufficiently here in 1998. And then price is finally back here in the year 2022. Right, so I'm gonna mark this yellow because yellow means sell for me, or it means at least that there's a supply and control. I want to know what's going on now. So like I said, we've cleared all of this, and there's no point in drawing all the other zones on the left. We just know they do exist. Now we're going to try and see if we can draw all the sequence, the higher highs and lower lows, right? So his price was touching a trend line and breaking it and breaking. All roads lead to this green zone. This green zone is that 1 year bullish demand. And now we learn that there is also a presidential demand, a 3-month demand in there with a very parabolic imbalance leaving away, right? And as price was moving away, it seemed to have created yet another, presidential supply. Right here, right, like that. Okay. Right, so now I'm just going to reduce this here, guys. Sorry, man. One day before we're done with the 109 assets, I will be a master of doing this in 10 minutes. I'll kill the intros or whatever, but if you can just give me 5 more minutes, I'll be done. Right, so presidentially speaking, there's pressure. Look at that. There's now a presidential bearish engulfing pattern selling, and we know the dollar is weak based on Euro USD and Pound USD. We know something is happening to the dollar. That is interesting. It is very interesting to see this play out the way it is, right? So I can't take trades on these time frames, but I can understand the creation of the trend. Now I'm going to move to my governing time frame. My governing time frame will tell me which area of value is in control in medium to long term, because that's really where I am in life right now. And my governing time frame emphasizes the exact same thing that I brought up. So what I'm going to do now, I'm going to put some horizontal lines to mark you know, the 3-month supply, only because it can get very untidy. It can get very untidy. Then what I'm going to do is I'm going to, you know, narrow down this zone like that, so I can just have my governing supply in control. You can see it was created in Christmas, in November. Hey, Christmas was good. People were getting distracted in markets. The banks were starting to pile up some sell orders. The new year happens, January, February, lira has disappeared. What the hell is going on? And markets use that time to come back and make contact with the governing supply, yellow zone, also with the presidential supply, the white line. Interesting. Pay attention. Now we move down, right? Okay, fine. Before we move down, because I have to break it down, slow down, Lira. Right? We can see, right? All zones are being used, right? It's all hands on deck, right? So price wants to tick the boxes. This is basic module 1. You guys have no idea the type of data I have on 365 students. I know how many of you have bothered to redo module 1, module 2. How many of you have enrolled? Believe it or not, Alvin, if you're watching this, my bro, 65% of students, go back and check those names, you still haven't enrolled, right? It's crazy, but we move on. We keep pushing. This year, we can't wait for anyone, because we're going to punish a lot of people, right? Price comes, create a supply, create a balance, fresh touch is created and supplemented by this move up. Now, if you look carefully, there are 2 demand zones. This is a governing time frame. You can't ignore it, right? So from afar, it looked like supplies were in control until we come close and realize that price, yes, it did, but then price came back, created another demand, tapping a demand, and now market about fresh touch. And we know our fresh touch doesn't go too far. We're wondering for a retest right now. I'm going to remove this white line because it's just distracting. We know it is the presidential chart. And let's assume the area of competition is not that wide and thick. Let's assume this is bound to happen. Then, as a trader, because you need to balance yourself out from a probability position. Number one, long term, 1 month, we've got a demand going for, you know, it's very, very, very probable. Number 2, on the 3 months chart, we've slowed down, made contact with the highest supply, created a retracement zone. Let's pull out the Fibonacci and find out if these demands were just sitting there randomly. Were they random? Was anything random? From swing high, swing low of the highest order, this is a 50% retracement zone. We know this is the most common retracement area. In fact, it's so common, it generally supports what we call support and resistance. This is a retail area. Most retail traders, 9 out of 10 times, gun to their heads, can get this trade right. So markets came all the way into this vertical line here, this pink line that of general price. And if we look back in time and break down this from weekly, daily, you can actually, if we to draw zone on zone, I don't want to waste time. I don't want to do a long way of analysis, man. But I hope you get my point, that you can see that markets have as a flip zone. What's a flip zone? Well, look at this. Every time price came to this recent green zone that I've just drawn, where price is again today, or according to our Fibonacci, market did something, right? They moved up, then they flipped, oh, and then they tried to come back in, then they flipped, oh, and then they eventually came back in again, then they flipped. So this is like a support and demand, a support and resistance trader's dream. And price broke through and then came back in, and then after it blocked them. You see multiple, I mean, there's higher time frames. You can imagine all the amount of fake outs, but also trading opportunities that it offered for support and resistance trades. I'm going to stop here because I think I've made my point. Right. So looking very carefully and just removing the clutter in our charts, we have the situation here where we must take heed of the fact that when talking about the area of value in control, we look to our governor. Our governor must tell us who's in control right now. Our presidential and long term will tell us where price is eventually going, right? So we do have a demand at play right now towards a supply that wants to maintain a lot of control. I won't lie. On the weekly time frame, we have this situation here, right? So now let's just draw this zone out, because we know that the demand has really been dug deep on the higher time frames, right? You can see here on the weekly, it is a weekly zone that is defending that governing zone. It's a weekly zone that is defending this governing zone. All right, it's absolutely defending. It's the last line of defense, right? So anything goes. Now I'm going to switch to a Kinihashi candlesticks. I apologize for the screams in the background and the length of this video. So far, I'm aiming at 20-minute videos. I really wanted it to be 10 minutes, sorry, but I keep getting 20 minutes videos. So you can see, according to Kinihashi, same thing. This demand didn't work. We always go for a lower demand. That's module 1 rules. We don't have these rules ingrained. You will keep getting stop loss apply. Is this a retracement area, meaning sell, breathe, then continue selling? Let's find out. A bearish a retracement zone would be from top to bottom, swing high, swing low, top to bottom. And we can see here, this is a PCP zone, right? Again, potential. If you watch my EURUSD, these are so important. I'm going to go back to normal candlesticks. So we know that there is a desperate demand pushing price up, but we've got a presidential and a governing chart that really want to sell. And even in our 1-year time frame, please don't forget, we are buying, but we're very parabolic, so we're due for a retracement. Right, so this is what happens here. Now that we're going to normal candlesticks, we want to start to look for some validations, right? So price really came through. I can't take such a zone seriously, personally, for a supply, according to my rules anyways, unless if I get desperate. Let's look at the volume-based candlesticks. All right, that's not going to help us. Because I'm trying to find valid order blocks, right? So I talk about this in my module 1, link down below, by the way. So do check out the course if you want to, right? So this is very difficult for me to call valid. I'm going to delete my Fibonacci for the PCP area, potential continuation value, 0.38%. And then let's draw this as yellow. I'm just drilling down, guys. I promise you, I am 2 minutes away, 2 minutes away from ending the video, 2 minutes away from this video ending before you've even liked it, commented, let me know what you've been doing for the last 3 months. Talk to me, right? So if I look carefully, I don't like this personally for selling. Personally, me, this doesn't really meet my criteria. Not a clean imbalance. When I look down here, I see fine. There's some potential here, but that's not really how I like to draw my engulfing candlesticks. But I know some people do, right? Still, for me, I see that there was a supply. There is a supply. It's within this PCP area on the Fibonacci, right? Perfect. You can see that price comes in, inverts, right? Upside down, hammer, blah, 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 price action traders, whatever, and sends price shooting down. Now we have a decision to make. Let's tighten this up a little bit more. There we go. Clean weekly demand, complicated 365 candles, imbalance. The markets are just hanging. It was going down, kind of coming up this week. I wonder if it is a good idea to stay out of USDJPY, or rather to wait for alignment, right? The alignment I would go for again is just based on the governor. The governor right now is a weak demand, really trying to push price up. You can see now when you go back to the monthly time frame, you will notice we're now playing at the wicks. We're now playing at the lowest of low points here, right? So if anything happens and price starts to revert to the downside, it's going to make a lot of sense when this monthly supply regains control. Monthly supply regain control, it's going to take out this area. It's going to completely, you see how it's already drained most of the buy orders, right? It's drained most of it. It needs to take it out. When this demand is taken out, folks, and hopefully we'll have more direction when we start our war room in May, which is a few weeks from now. I can't tell you by the 1st of May, or I know in EURUSD I say the first Sunday of May, but we have to first finish these 109 assets. I'm trying to do 3 videos a day just to get there, right? So that we second week of May, maybe, where we can start to kind of like visualize this happening. But I suspect that we have to wait for this to be taken out. On the weekly time frame, we've got something like this. There you go. Price is just mellowing out here, right? So I said we need to see this demand being taken out, right? Get taken out. or it might bounce up. Either way, we're looking for better high probability sell setups along with monthly. I can't make heads and tails of this. I'm going to move to daily. There we go. Clean up my daily chart. Now on the weekly time frame, this is what I have, right? Right now on the daily we have, so we can see what's going on. This area looks very clustered, folks, right? You've got so many, continuation patterns, supplies, blah, blah, blah. Price really digs deep to this area. No real supply here on our left to slow down price. We do have, however, a daily demand, right? Remember, a lot of this price is leaving a governing demand, or the lower parts of it. So of course, markets are maintaining higher highs. So you've got a daily demand, the last daily demand right there at play, pushing up. Some people will run to sell here. I'm gonna wait and watch and see. I'm going to watch and see what's going to happen here. By the time we start trading in May, or when I start trading in May, there'll be a lot of clarity, right? Because this area might actually be taken out. If it is taken out, remember the power is coming from buyers, right? Buyers making contact and fighting back. If this area holds, then we will see what happens. We'll see what happens. Right, so this is we will see, we shall see. I mean, I could do a sequence alignment in a different video to bring up better probabilities, but just be on the lookout. I have no buy or sell unction on this particular chart, right? So right now we're on our way up, and I'm presumably going to come to this yellow zone. So it's going to be a buy for a couple of days. We shall see. But the question is, what's going to happen when price gets here? 3, 6, 5. Shake my hand. Thank you so much for watching. I apologize, man. I'm only realizing now that you got a smaller view of the charts. I do apologize. I haven't recorded videos for in a long time. Had I known, this is what I would prefer. Sorry for that. I'll do better next time. Shake my hand. Peace.